Hey, good morning. What's up, guys? And thanks for tuning in and welcome to another weekly crypto market update. This is Setup Saturday, and as always, I'm here with Zero Cool. How are you?
Hello. Not too bad.
Yeah, it's been a while that we spoke, right? It's
Indeed, and I
been
think 3 weeks.
I
Maybe.
think it's 3 weeks, yeah.
Yeah, and then summer vacation also coming up. Probably less streams.
Yeah, when are you coming again to Belgium?
I'm leaving next week.
Next week already.
Yeah, and I'll be there for 6 weeks. I think. Yeah, 6 weeks.
Okay. So do we do the? Are you here for the Saturday stream next week or?
No, I won't have a setup yet. Weekend after also not. Weekend after that, maybe.
All right, no worries. I'll see you. I'll probably do it alone then. So, all right, let's dive right into it. A lot to talk about today. So, as always, I'm gonna talk about the macro to understand the Bitcoin price movements a little bit. And this week, the macro is mostly the geopolitical tensions. So we had the China-US deal. We have, of course, the war, and then afterwards, Zero Cool will give his technical analysis. So. Let's dive right into it. So first, everyone, of course, knows it. There was the strike of Israel on Iran. And then, of course, it was yesterday evening, Iran striked back. And I've got a small video for it because it was crazy. I wanted to show it. So it's crazy, right?
Yeah, absolutely insane. The missiles, the Iron Dome being penetrated. Impressive, but scary, honestly.
Yeah, and of course, as always, this is more of an investor stream, so we need to use this information and try to get our honest opinion of what we think the price of equities of Bitcoin will do. So the best data we have for things like this is we can look at historical data, how price reacts on a war invasion. And a very good chart, I think we showed this, I think it was 7 months ago already now.
It's Ukraine, I think, and Russia happening.
Yeah, correct. Oh, I think it was also an Iran-Israel strike or something.
Maybe. They've been at war for like decades, right? This looks new because it's not in the news often, but this has been going on for ages and will most likely go on for ages, honestly. So
what you here see on the screen is the S&P and how the price reacts every time there is a war invasion. And if you look good at the charts, you see every time there is an invasion, the price initially drops, but then you need to buy immediately because usually the price tends to go upwards after a war invasion. So why is that? Like we said last time, war, of course, isn't good. But the thing is, especially these last few years, the equities and all the rest, Bitcoin, let's say, isn't moving upwards because of the companies are making that much progress. It's mostly tied to government spending, the global liquidity cycle. So if more money is into the system, then all the equities go up. So the thing is, war often leads to government spending. And that's just the reason why equities are going up when there is a war invasion.
Yep.
And then, of course, so this is the S&P. But what we focus on mostly is, of course, the Bitcoin price. And I have a very good table here. I showed this on my video that I put out 2 days ago. And so if you see here, there is as well, so we have data from the US-Iran escalation, which is basically the same what's happening right now. We also have the Russia invasion of Ukraine. And we see in every instance, Bitcoin is the best performing asset in both of these escalations. So this is the S&P, but if you just look at Bitcoin, it's an even better hedge against a war. Why? Because Bitcoin reacts better to government spending, and that's also the reason why it was created than the S&P, for example. So honestly, I've put out a tweet an hour ago, and buy the invasion is most of the times a good strategy.
Yeah, I saw another tweet Also yesterday, I think, was one of that not I've heard before, but apparently an old Wall Street saying is that it's not by the invasion, but by when the death toll numbers are appearing on the news.
Why? What?
A little bit more morbid than by the invasion, but it's when they start reporting the news of how bad it is that people are minimizing the events and are more risk on because, oh, only X amount of people died or whatever it is. So use it in tandem, I guess.
Okay. And the second reason why I'm showing this table, this chart, is also because of the tariffs. So as you guys know, there was the US and China trade war talks that just wrapped up on Wednesday. And also you see here Trump's Liberation Day. So this was the previous example we have of when tariffs are getting put in place, how the price of Bitcoin reacts. And as you guys can see, Bitcoin performed much better than gold and the S&P when Trump, well, of course, after 60 days, when Trump put his Liberation Day tariffs in place. So, of course, initially the price dropped immediately, like every asset in the world, basically. But then 60 days later, Bitcoin was up by 25%. And the reason being is just, I think Bitcoin is being seen now as a safe haven asset, and there was just a flight of more riskier assets, like, for example, equities, into Bitcoin as a geopolitical hedge. Also, the second thing, of course, is, like I said before, Bitcoin is made because of the fiat debasement and as an inflation hedge narrative. And of course, when there are a lot of tariffs, people were speculating there will be more inflation. So that's, of course, also good for Bitcoin. But I think most prominent reason is because of these geopolitical tensions. And of course, Bitcoin isn't tied to any single nation. So that's why it outperforms the tariffs. The thing what I want to say on this is, since there is the US and China deal, I think this isn't the best for Bitcoin. I think, and I told it as well in my video, I think the S&P performs better than Bitcoin in this kind of scenario. And we saw this in on May 12th as well, on the Geneva truce. This is kind of the same that happened this Wednesday. The S&P performed better as well. So to me, this is kind of like a double-edged sword for Bitcoin. Because on the one hand, removing the trade uncertainty is super bullish. But then on the other hand, I think people will go back more to riskier assets like equities than Bitcoin, which is showing now safe haven qualities. But then, of course, we saw the war happening. So that now comes back to safe haven assets. So who knows? So the thing that so this is when Trump put out, there was the deal. This is so if you want to know more about, more in depth, what the deal was about and how it reacts, how Bitcoin reacts on this, check out my video that I put out on Thursday. There I give a little bit more info. So here I'm just trying to go quick over it. So like I was saying, this deal mostly supports the S&P, and you see it also on the chart. So I think I put out the video here where I said, okay, Bitcoin is gonna underperform the S&P, and this is the chart Bitcoin against the S&P, and you see it happening instantly. And I think maybe this is the war escalation, and then now Bitcoin performs better against the S&P as well because, like I said, the safe haven asset. So I think Bitcoin is reacting exactly how it should be. There is no surprises, and one more thing I wanted to say about this. Yeah, so this one, showed it as well on my video. This is honestly a very good chart. So this is the trade war intensity against the S&P. So how bad the trade war is, that's in correlation with the S&P. So, and you see the S&P follows that extremely. So when there's a lot of trade war intensity, when there's a lot of tensions, then of course the S&P is going down. So it's crazy that it follows so good, that the correlation is so insane. But I think now the headline risk is a little bit less because I think most of these things are priced in. I think if we will see more and more headlines of deals that have been made in the coming weeks, which Lutnick, by the way, said in his latest interview, I think this will have less and less effect on Bitcoin's price. But so that's another thing. That's also one of the reasons I'm turning maybe a little bit bearish, but let's say more neutral. That I just think there is no more news or good news to look up to. There's no more catalyst coming for the price to go upwards. The only thing that still is there, but not too much, is of course the global liquidity. And so let's have a look at global liquidity this week. So if you can see, global liquidity edged a little bit higher last week, and it went to 176.6 trillion US dollars. So not much. So it went up by a little bit, but in general terms, there is still a slowdown in global liquidity. A couple of reasons, mostly are central bank related. So the Fed isn't doing anything. So the Fed is still in slowdown. There is still, so the second reason, there is still ongoing QT by the ECB and the Bank of England, which is not good as well.
Again, I think.
What did you say? They cut again. They cut again. They cut again by 25 basis points, but they're still in QT. So that's the most important thing to me. And then, of course, the third reason is the Bank of Japan. They're still slowing down as well. So they're also cutting. The only thing that is good is that the People's Bank of China, they has been easing. They have been easing. And then, of course, the fourth one, and I think this is mainly the reason why global liquidity ticked a little bit higher, is that the dollar is dumping as well.
Yeah, it's broken a big level in the last couple of years. So the 100 mark, I think it's trading at 99, 98.
Did Eldon put out the tweet on that now? Was it?
I think so, yeah.
Yeah. Yeah, so every central bank in the world isn't in favor of global liquidity. So that's why I think we're just going to see a neutral summer. The thing what was remarkable, and I opened some tabs for it, is that now every big analyst firm is trying to value Bitcoin according to global liquidity, while we were already saying this for over a year. Well, maybe Raoul Pal is also doing this, but for example here, Delphi Digital, they also put out for the first time a chart of the global money supply. And the thing that's remarkable is that it's the global money supply, which is the M2. And I think Michael Howell was a bit angry these last few days because he put out a tweet saying global liquidity or world M2 size matters. And so he's showing that global liquidity is actually 2.5 times bigger than the global M2. So global liquidity is a much better data to value Bitcoin and to see the liquidity in the world. But the thing is, M2 is just so easily measurable. That's why everyone is using it. But if you want the correct way to measure it and the correct way to value Bitcoin, I suggest using global liquidity. Although, so if you look at the chart, it's kind of moving in the same trajectory. So since World M2 is 40% of global liquidity, it's kind of showing it's going in the same trajectory. So of course you can use M2, but if you want to be perfect, let's say, then of course you should use global liquidity. Precise. Yeah, that was the word I was looking at.
Yeah, it's global liquidity, not M2, and everybody is using M2. It is true.
But yeah, so I think we will see more global liquidity coming end of Q3, end of Q4. So that's my plan. That's when I think the Bitcoin and maybe the more riskier assets like altcoins will move upwards. But of course, you don't have to guess, so you can just follow it. There is a 13-week lag. Raoul Pal uses 12-week lag. I think Delphi Digital as well. Maybe 12-week works better with M2. I don't know. But yeah, so this was my part of the macro to understand the Bitcoin price movement. So let's see what you have prepared, Circle.
Yeah, I want to start with a little tweet about the war and how to value risk. Let me know when I'm on screen.
You can go.
So it's pretty simple, right? You have 4 options. You either buy or you don't buy, and then either the war doesn't happen or the war happens. So if the war happens, everybody dies and your 2 options don't matter. So we were going to neglect that. The chances are rather slim. And then the other chance of what will probably happen, like always, is it doesn't happen. And then if you don't buy, you're sidelined. And if you buy, we go up and you're rich. So this is your risk matrix. And to me, it's pretty clear that it favors one option over the other. Now, am I overly bullish? No, I don't think so. I think I'm joining Jack with we're gonna be ranging and going down slowly. It's the same I was 3 or 4 weeks ago. We did go up a little more, and then we are starting to trend down. If we grab our range chart that we've been using for the last 6 months, we're back inside of this range, right? And a nice little fake out again. And then, yeah, people screaming double top. There's like a massive RSI diff as well on the daily. You just need to understand why the price is moving and why it is stalling there. And it is global liquidity, and sharp rejections like this is purely because of news events.
Yep.
But for me, trading crypto has been more and more boring. This was like up only. Let me remove my my snapper. Up only for a while, and I will just like do this for a while, I think.
Yeah, but that's the thing. So, like I said, if people are thinking that Bitcoin shows safe haven qualities, of course, the only reason that they can think that is because it's way less volatile. That's why it's
absolutely
boring.
It needs to be boring, right? It needs to trend up only.
The goal of Bitcoin is made to be boring.
Yeah, or trading Bitcoin should be boring. It shouldn't be super volatile like it was like 7 years ago, right? For me, Bitcoin, there's not much to say about Bitcoin, right? I think I'd rather talk about Ethereum with that had a crazy good run.
Then the war started.
Yeah, and then the war started. I'm going to quickly hop to Ethereum. The bounce back, amazing quadruple top, I would say. This was achieved.
Does it exist?
No. It doesn't exist. I don't think it's a pattern. If we look at the open interests, it went up insanely on Ethereum, and normally it just went up like $5 billion, which is like 25% of the total open interest. The reason why this didn't correct earlier was because Sharpling Gaming are using the Sailor playbook, but on Ethereum they bought $463 million worth of Ethereum for their treasuries, which made the price go up from like $9 to like $70.
Of their stock.
Yeah, of their stock. And so it was like, wow, if you do it with outside of the Bitcoin playbook, it also works. People flock to that, and then there was like a 80% correction on the stock because
I think 100% of the insiders sold.
Yeah, well, that seems to be the confusion. People posted SEC charts and saying, hey, look, they sold 100%, but people who actually know how to read this said they didn't sell. This is how you file it. So I bought a little couch money, a couple of $100 yesterday. When it's down like 80%, I think we can pull up the chart real quick. SBET, I think it is called. So yeah, Giga Giant pump. Here you got your insiders buying. Here you got your news going into 1,700% spike, absolutely insane. And then here after market, you got your news dropping of, oh, it seems they all sold, and you have like a 70% correction. I scooped some up around $10. This can go to zero, and it wouldn't change anything for me. But for me, this is a play you take, right? This is 100 times more interesting and fun to follow than Bitcoin is just ranging. This pumped and dumped, and the dump is on questionable news, possibly crypto traders reading SEC filings wrong. The chances that this doubles, triples with a correction when they make like a statement of, hey, we didn't sell, here are our actual numbers, and this corrects times 2, times 3, that's like 200-300%. It's more fun, more probable than Bitcoin ranging sideways.
Yeah, and I think the play is if the CEO or the founder is as crazy as Michael Saylor, and he's just going to raise more and more that to buy Ethereum, then this can go parabolic like MicroStrategy.
Yeah, they plan to raise another $1 billion. So
to buy Ethereum.
To buy Ethereum. So yeah, for this is what I've been doing the last couple of weeks, stuff like this, and not Bitcoin or Ethereum. That's just like sideways. I've unfortunately it's starting to lose my interest crypto. There are more fun plays with higher return potential and better risk rewards than crypto at the moment. And maybe that's because there's a shift in like more and more people are investing. So I think our friend Quick posted a Twitter. Let me see if I quickly can find it.
The Discord,
more people
right?
In the Discord, yeah. I'm going to see if I can quickly pull it up. And if not, it basically said that there was a record amount of people who are investing in... Yep, there we go.
But I think it's normal. It was more people invested in the S&P. But I think the guy posted it to show maybe that it is a top signal. But I don't agree, because the thing is why people are not in cash and more in equities is just because the money supply is going exponentially. So it would be stupid. It would be stupid for you to hold cash. So it's not the reason that more people are investing in stocks. It's just people have to have stocks and not cash, because or else they will just lose their money more exponentially than in the past.
Yep. Yeah, I don't think this is like, oh my God, it's a top signal type of alarm. But this shows that more and more people are in equities. And it's not just like S&P, right? It's like mutual fund, pension funds, foreign investors. It's aggregated data. There's more allocation towards it, which then again drives the price up, right? Because there's more and more people allocating. It's like a flywheel. And yeah, I think I'm not the only one who's getting quote unquote bored with Bitcoin and crypto in general, and more into equities.
You're also getting older, mate.
It's true. my attention span is lower, I guess, or I don't know. The flame is fading out, I would say. And I'm sure once like we get through the summer and it's September, October, November again.
It's always like this. Like summer is less volatile, it's less volume, so it's always like this.
Mm-hmm. And then again, after the summer, it will spark up again, hopefully, and we can make some more money in crypto. But back to the charts, right? Or instead of old boomer yelling at the cloud, crying, rage bounce. I'm gonna throw on the Ishimoku charts cloud. Sorry, but this is the. There we go. This is the crypto setting. So I think this is starting to look like a C clamp. I think it's called. And then from here to here, 97, which goes into our cloud over here, and our mid range of the range we've been drawing for the last 6-7 months. So yeah, first level of interest, sub 100, I think, like sweep these lows into this area. That's probably
it's a good support level. So the cloud acts as a good support, and is actually at the moment at the same price level as the Kijun, so it can be a good support level for me.
Yeah, that's where the first time I would maybe look at longs. Honestly, I'd be a bit more aggressive, and if we throw on some other indicators, you have the yearly open. Oh, yep, here. This is the bottom of our range. This is the bottom of the cloud, which is flat. This is the yearly open. For me, this is the area where I'm interested in building positions again. Sub 94 into 92 even. This box, this is where I'll start building a position more. And it might take months to get there. It might take 2-3 months to get to this price. But I think if we touch yearly open, you just buy and don't look back. And you can be super cautious with your risk and put your stops at like under 92 or at 90. Because 65 is still a level that's in my mind. So I doubt we'll get there. But if we start losing this, it becomes more likely again.
Only if the S&P drops as well, in my opinion.
Mm-hmm. We can have a look at the S&P. This is a fractal that I've been using. It's from everybody's using the COVID fractal. as a up only recovery. I'm using the one from the year before to put on the weekly. So yeah, everybody's been using this fractal as in, oh, we're here right now and we're going up only. I honestly think we're here the year before in 2019. We still go up, but there's still a nasty correction.
No way that we will see a COVID-like correction.
No, well, you never know. It's a black swan. You can't predict black swans. They're not in the charts. They're an anomaly. They should never happen, but they happened.
Yeah, maybe if the nuclear war happens, I think I saw it on Polymarket. There was like a 20 or 25% chance, which is crazy. Yeah, then of course we will see that kind of drop.
No, this is 1-to-1 time-wise as well. This would indicate like end of the year to get out. I am going to cut heavily in my exposure to everything, including nuclear, when we get around here. Maybe a little less nuclear and more out of other stuff I'm in. But this is a level where I'll step back regardless if what's where we are, when we are.
But why? I think a friend of mine in real life told me the same thing, and I asked why that means that you are bullish on fiat then, because you sell it to fiat. You need to have a plan for after.
I just put it in a fund that gives you 4 or 5%, and yeah, sure, that's fiat, but it's less risky. I don't know,
because
I have targets.
If the price is there, that means that there's a reason that the price is there, so that there will probably more liquidity, that there will be more money creation. So do you really want to be in fiat then? So I don't know. It always depends. You cannot just say, okay, when the price is there, I'm going to sell to USD and I'm going to hold USD. I think it depends what the world looks like when we get there. I don't know. It's weird to me to just say it at that price. I'm going to sell for the S&P.
The S&P is in a collection of the top 500, right? So maybe stuff like, what's it called? Paltner, the company that's trading at like 300, their revenue.
I forgot, sorry.
Yeah, but stuff like that gets added to the S&P, and that just bloats it up towards there. Like you said, it all depends. For me, it's a level where I'm going to get out a little bit regardless of what is happening where we are. Remember, you're always the most bullish at the top, right? And most scared and bearish at the bottom. So depends on the sentiment. If we're up there and everybody's bearish, then maybe I should allocate.
Is there a top since the currency keeps going down?
No, but the currency needs to be there. You cannot go endlessly up, right? Otherwise, your bread will cost $100, and that's
you can, and that's what's going to happen probably. I saw an interview with Michael Saylor yesterday, and well, I didn't finish it, but what he said basically was that there is every 30 to 40 years, that's the average duration that the currency exists. Of course, you have the US dollar now, which is much older, I think 110 years or something. And so this is the best currency in the world, but it's down 99.5%. And this is the best currency that exists. So that's just crazy. And it will probably keep going down year after year. So that's normal then that your stocks will go upwards. And there is no top because there is no bottom.
Nothing stopped this. We sell it for Bitcoin then. We allocate to crypto shares.
That I agree on. So there is Mob Thijs in the chat, and he's saying DXY looks like it will bottom soon as well. So that's maybe a good idea if we can check out the DXY.
I'll put on my DXY charts with my painting that I've been painting for the last 2.5 years. This was long year longs and sell in May and walk away from 2-3 years ago. Even I've been painting this for a while. And yeah, we've touched that 98 level, 97.7 level here, these lows. Absolutely crazy. This also fueled part of the crypto run, right? Dollar devaluing, meaning Bitcoin is worth more because the dollar is worth less. I do not think this if this starts breaking down to I think the little Lynn Alden tweet you were referencing was the fun zone starts below this yellow line. It's over here. This is she marked as the fun zone. Maybe because if we start entering this thing, stuff is going hyper parabolically up in the kind of Bitcoin and stocks, I think.
I'm going to show my chart real quick, and then I'm going to go back to your screen. So this chart I showed you guys from here, so already from September. And the reason why I showed this is the price action of when Trump was going to go in office as well in 2016. And I was saying Trump wants a weaker dollar. This is what he's trying to do. And we saw the same happening in 2016. And it's following the price at the moment is following almost the same as it did in 2016, 2017, just a little bit quicker at the moment. So I don't know.
Sharper corrections.
Yeah.
Does it look like it's bottoming? Yes, but it really will depend on the trade deals, right? If he gets his trade deals in and they're positive, the dollar will regain strength, I think.
I think so as well.
Pure technicals, it's super. For starters, charting, like doing TA on a dollar index is super hard, right? You have your obvious levels and where you want to risk on and risk off. Like this was all these white texts regarding towards crypto. Like when I first started to put this level here on, it's like towards 30,000 and it was like 50, 70, and now we're at 100. So it's hard to do TA on this chart. Does this look like it could bottom? Yeah, absolutely, but it needs to close above 100, I guess, to actually like bottom and start doing this. But what's the catalyst that it would go up? The trade deals that start to come through? Trade deal with China?
No, I think it's possible that it will just bottom out. I also believe a lot in Brent Johnson's milkshake theory. And of course, as well, the US has still high interest rates, which is better for your currency, while, let's say, for example, the ECB, like we said in the beginning, is cutting time after time. So that's all very good.
Euro.
It weakens your currency, yeah. So I think it's a very good possibility that it's bottoms out here. And then, so the thing is, knowing this, so I want to be more in USD than Euro, let's say. But what I want to say, so knowing this is, that's not good for Bitcoin or risk assets either. So if you think that the XY is going to bottom out, that's also maybe the time to a little bit be risk off equities, Bitcoin. So like I said, that these are all things coming together why I'm just neutral. So full transparency, I'm at the moment like 50-50, 50 cash, 50% allocated into the market. So that's how I'm playing it this summer.
I'll remove my indicators here. There was like a falling wedge on the stocks as well, I believe. That has been broken. And we'll see how the market reacts on Monday, right? This is like a little falling wedge action happening. Where we broke out of. Put another 4 hour. There we go.
I think we'll see a relief rally.
On Monday, because nothing happens, most likely. Yeah, I think so too. I remember when we first started this, my theory was we're going to either have like a year and a half of a nasty correction where everything is doom and gloom, and it looks like it's end of the world type stuff, and then it will recover, or we're just going to go like up only for 10 years, right? And starting to shift more that we're just going to go up only in everything, in equities and in crypto and risk assets in general. The longer it doesn't start to correct, the longer or the more I believe it's just going to be up only.
The only, so yes, I agree, but the only reason why I think it might not be the case, which I give like 20 to 30% chance, is because of AI, we might see deflation. But let's say because of the money supply is going exponential, I think everything will go up only, but this is like the only thing why maybe that will not be the case. We'll see.
True, AI is always there, right? They're still advancing, and that's why I prefer to play on like the nuclear approach on AI, because AI needs power. I'm playing nuclear as the growth to AI and not AI itself, because you could get a ban on AI. I say, I don't know, it goes sentient and the world decides to get on the same line for once and be like, oh, we're going to ban AI everything. Then every AI stuff will just drop super hard. Everything will feel it, but your nuclear facilities that you need to run the world will still be there and can still be used. So it's a little a little less risky approach to AI, I guess you could say.
What do you say? Let's wrap it up here and do our predictions for next week.
Let's wrap it up. It's going to be a boring summer, guys. See you in 7 months or in 3 months. No, just kidding. Let's look at our predictions.
I'm not sure if we made our predictions, but if we did, I won.
Compared to there, yeah. That's true.
But
I just want to point out once again, the price was going towards my prediction, but then reversed. It's super hard to say, oh, next Saturday the price is going to be this.
I'm putting it here on the Fibonacci support level. So it's possible that, like you said, we will bounce on the Kijun or something, although it's...
Throw mine on the Kijun, 97 points.
Okay. All right. So this was it for us today. So I hope you all enjoyed it very much. So if you did, please leave a like, subscribe if you haven't yet. And of course, you can find us in our private Discord, which is in the comments down below. If you have a question, join the Discord or leave a comment on YouTube. And then we see you all next week. Yep. Bye, guys, and thanks for watching.